Hey there, and good morning. Happy Sunday to everybody. Coming at you with this week's market overview and a few earnings stocks to watch. Not a whole lot. This is a retail earnings week, and anybody that's been following me for any length of time knows retail is not one of my favorite sectors. So, not a lot of stocks that are going to be really on my radar for this week. Is one retail name, but we'll get that in a minute. Um, so last week, the breakdown and trade talks with China put some pressure on the markets, and technically, we've got some things to be concerned about out there. We'll see how this week acts, but it's definitely a time to be somewhat cautious. The one sector that I am definitely keeping a close eye on is the small caps, right? So let's just go through the sectors real quick, and then we'll head over and take a look at a couple other things. But IBB, you know, that is one that I am definitely keeping an eye on. There are some names within the biotech space that I think have interesting looks to them. Uh, IBB was actually the sector to break down first, right? So you see that back here where we had this breakdown, and it still looks fairly weak. It looks like we're putting in some lower lows and lower highs, and it would be concerning to me if we continue to do that. I'm looking at the 100 level as an area to maybe find some support. So far, we've got a little bit of support there, but if we break through 100, then we could very likely be coming back down for a double bottom retest here down to those lows that we saw in December. So that's a little bit concerning for IBB. IWM, we closed below the 50-day, and I think the line in the sand for me on IWM is the 150 area. If we break down below 150, I think that becomes somewhat concerning for small caps. If small caps really break down, that could be the sector that leads the rest of these sectors lower. So a little bit concerning there on IWM. Going to be paying close attention to that 150 level. IYT, transportation, right, broke below the 50-day, broke below the 200-day, and actually wound up closing the week below those two levels. So that's a little bit concerning there. QQQs, we're trying to hold on to the 50-day moving average. Um, some of the big names. I think one name in particular that is pretty interesting is Tesla. That is sitting at some levels that I would think, if you are long, could be pretty concerning. That breaks down below 200. It could get pretty ugly for Tesla. Um, and some of the FANG stocks having a little bit of a pullback. So, but the overall sector, the tech sector, actually is holding up fairly well. SMH, another concerning area, right? So, Nvidia reported earnings and was unable to give any reassuring guidance, and that put some pressure on SMH. I think the trade war concerns also could weigh heavy on the SMH. And if we break below this 105 area, the next area of potential support could be in the 100 area, close to the 200-day moving average. So a little bit of weakness there technically for SMH. S&P 500 actually, trying to hold on to the 200-day moving average, held up fairly well last week. We'll see if that continues, but like I said, I think there are a lot of reasons to have some concern and some caution in the markets. If the markets do roll over, TVIX, which we did see a spike in volatility last week, it's interesting that we pulled back a bit, but TVIX, if the markets break through some key levels, that is one to keep an eye on for short-term trading opportunity. Do not chase this thing. If you see TVIX up in pre-market, don't go chasing TVIX. and I guess the one thing I would say about this particular market too is we're a tweet away from a complete reversal in the markets, right? So I mean, if Trump comes out and says, "Oh yeah, Xi and I, things are great, and I think we're going to get a deal done," boom, you get a bounce in the market, right? And then all of a sudden you get another tweet out that from China saying that they're not going to accept any pork from the states, then all of a sudden the markets sell off. So you got to, it's very, very tweet oriented, right? We're very, very headline driven here. So just be cautious of that. And that's why I suggest, if you see TVIX ripping, don't go chasing that thing. Look for an intraday setup or a pullback as an opportunity to maybe take a little position. And I wouldn't hold TVIX overnight. TZA, I think, for that one, it's also a short-term trading vehicle. But if we do get a break in IWM below the 150 spot, I think that TZA could have a pretty good move higher. That one, I mean, it's still a higher risk swing type trade, but watch this $10 level. If we take out 10, that could get pretty interesting for TZA, and that could be an interesting short-term swing if the IWM does roll over. Aerospace and defense, actually, there's been a couple of names within the space. I've mentioned them before. MAXR, which is one that had a beautiful run after its earnings, pulling back. I'd love to see that thing go back down and do a double bottom test, and actually add. It's a long-term kind of a turnaround story play for me, and I do have a position in it, and right now it's sitting pretty good, but I'd like to be able to add to the position on a pullback. Katos had an amazing run after their earnings, breaking new all-time highs over the $20 holla. That is one that I would like to see pull back to about the $16 level, which is the breakout area, and I wouldn't mind actually adding some Katos in that area. XLE Energy and the XOP energy space, just not, kind of a disappointing space for me. But, with everything that's going on in the Middle East, who knows? You get a headline. Oil could rip, and maybe energy at some point gets a bounce as well. But what was concerning about energy is the fact that oil did rip, and the energy, we had a big, acquisition that is taking place in the space, and the sector itself just didn't really respond. So that's a little bit disappointing there. And I am still keeping an eye on the space, just not as hot on it as I was. Financials pulling back to the 50 and 200-day moving average, holding, see if they hold as support there. But financials are holding up fairly well. A lot of big, thick stocks within that space. Not really that focused on that space. Industrials, XLI. So, the China thing, I think, could put some more pressure on the big industrial names. XLI is looking like it's trying to hold on to an area of potential price support, but if we lose this area, it could get challenging for names within that space. Consumer staples actually holding up fairly well. They're at an area of potential resistance here. Have had a nice little run. Wouldn't be surprised if we could just consolidate for a bit, but worth keeping an eye on consumer staples. And if the markets roll over, this is a sector that can be considered, I guess, kind of a safety trade, so keep that in mind. XLV, kind of have a reverse head and shoulders pattern thing develop in there. Healthcare, I think there's some there's probably some decent swing or long-term hold plays within that space. Thicker stocks, more investments, or like I said, longer-term holds than day trading opportunities. But I think worth keeping an eye on that space as well, is as a place that maybe you park some money in a weak market, right? I think some of those names offer some safety and worth keeping an eye on that space. Consumer discretionary, pulling back to the 50-day, actually trying to hold it as support. Actually, the space looks kind of interesting to me. It looks like we do have some support right around the 110 area or so. Some price support there. Maybe we go down and test that. That happens to also be right around where the 200-day moving average is. Could be some support in that area. XOP, already talked about the oil and exploration. Disappointing action there, but maybe we find a bounce from these levels if things really heat up over there in the Middle East. And then XRT, so big week for XRT, and I got to tell you, that's a pretty ugly chart. Looks like it's bear flagging, and if we see some disappointing numbers from some of these retailers reporting this week, well, then I think maybe you see that bear flag break down and we head back down, maybe get a double bottom test down to those December lows. So that would be my take on the overall markets. Like I said, my biggest focus this week is going to be IWM and what happens there. But there are definitely reasons to be cautious out there. Okay. All right, so before I head into what's the economic calendar, let's take a look at the T2106, T2108. These are the indicators that when things get overdone to the sell side, overdone to the buy side, and right now we're kind of fiddle in the middle. Right, we get to 20 or below into the single digits, and you're seeing things that are getting to extremes and overdone on the sell side. And then if you get over 70, you're in extremes and with things being bought up, right? So T2106, like I said, fiddle in the middle. T2107, fiddle in the middle. And T2108, it's starting to get. It looks like we're working our way lower, right? So get below 20, get into single digits. That gets very interesting for me in terms of maybe getting somewhat aggressive in some buying. So right now I am sitting on probably a good, or not probably, but I am sitting on a good chunk of cash, just waiting for opportunity to jump when I think things have gotten a little overdone. So right now, still kind of fiddle in the middle. McClellan oscillator, which is an indication of fear. We got down to about minus 158 last week, and we're kind of hanging out minus 155. We get down to extremes, minus 250, minus 300. Then we are probably at a point where fear is a bit extreme, and it could be an opportunity to dip the toe. So hard to do when there's a lot of fear out there, but can be quite lucrative if you can stomach doing it. So, all right, that's the case there. Let's take a look at the upcoming week and all the earnings. Where are we at here? Okay. Oops. All right, so economic calendar for next week. Not a lot going on in terms of economic data. We do have the FOMC minutes on Wednesday, so that could be a little chop around day heading into those minutes. There's no meeting or anything like that, so how the market interprets the FOMC minutes could be interesting. We get existing home sales, Chicago Fed. Let's see, weekless jobless claims, manufacturing PMI. Those could move. Those things could move the markets there. And then we get durable good orders and core capital good orders. So not a significant amount of economic data, but a couple of things that could move the markets. And then here we are with the earnings for next week. Like I said, we're heavy on retail, we've got Home Depot, JCPenney, Kohl's, TJ Maxx, Target, Lowe's, right? Big week for retail. Ross, um, Hibbert Sports. I mean, not my ideal plays by any means, but look, it could be an interesting week in terms of earnings for the retail space. So that bear flag breaks down, it could get a little ugly in that space. So we'll see how it plays out. All right, so that's that. Let's take a look at the stocks on my radar from the earnings calendar. Last week, very good stock, LIQT. I mentioned it, highlighted it last week in the earnings stocks to watch, and had a fantastic week last week. It was a recent reverse split. They reported decent earnings. Did I play it? No, I sat and actually watched it. I had the opportunity to play it. We were looking at it. I just didn't jump. And I think that probably had a lot to do with what was going on in the overall markets. But as you can see, this had a very nice move last week from 8 to 10. Now looking at it for a pullback into the 9 range, maybe down to the 850 range. I think it could be an interesting spot to take it for a long. This thing could continue to just grind higher. Nice volume. But, what I'm kind of hoping for is that we get a low volume pullback. We drift back to 9, maybe 850. That creates an entry opportunity in that one. It's a thin trader, thin stock, but very nice action. I think we're still having on your radar. So, all right. As far as earnings for next week, Lionsgate, I think is an interesting one. It actually had a nice little pop on Friday, and I'm not exactly sure what it was that popped it, but John Wick 3 came out, had a good weekend. It popped right up into this long-term trend line, and you've got a potential double bottom little formation there on the daily. Good volume on Friday. I think there was actually some speculation or rumor that they might buy something, or something might get bought from them, something to that effect. If I remember correctly, there's some kind of rumor or speculation. But yeah, John Wick. These guys report. When do they report? They report. Looking right now. And for some reason, I can't seem to find it on that little. Where the heck is it? Oh, there it is. Thursday after the close. So, this could continue to run heading into its earnings, and then maybe you get a little play out of it heading into earnings, and then you take most of it off the table if you get a nice hit before the earnings. I think potentially, you could get a pop up into the 1860 range, test that 200-day. Nice volume, like I said, on Friday. Maybe a red to green type move on this one. Pull back to $14.80, $15 as an area of potential price support, and then bounce off that. And maybe you just hold a little piece in through the earnings, but pretty interesting setup there on the daily time frame and testing that long-term trend line for a break. So worth keeping an eye on Lionsgate. Home Depot reporting, actually saw Carter Worth was thinking that these guys are going to disappoint and the stock's going to get hit. That is a possibility. But from what I'm seeing, it's at a very interesting spot. It's right here at this 190, potentially holding as support, as price support. It is below the 50-day moving average. We'll see how it plays out. I mean, if Home Depot, I think it is worth paying attention to, because if they do disappoint, I think it's going to put more definitely put more pressure on that retail space. And at some point, I think Home Depot is a very interesting, probably long-term hold. If it were to get down and retest the 160 area, that could be an interesting spot to jump in on a name like Home Depot for more of a long-term hold consideration. IGT, I'm from Vegas, so this one, of course, I have interest in. This is one of the, you know, slot machine makers or electronic game makers in the gaming space. It's been beaten up. It's in a pretty big downtrend here. Price flirting with the $14 holla. Let me see real quick what the float is on IGT. I think it's a fairly thick stock. Oops. So 99 million shares in the float. It's actually not that thick of a stock as I thought it was. So 250 million in cash. They got a boatload of debt, and that's probably the big issue with this stock. $8 billion in debt, 260 million in the bank, and about 8 million in positive cash flow. So I think that the issue with this one would be the debt. Looks like they do pay a dividend. So I think this is one that is interesting. They report Monday before the open. So, if this stock, we're going to know very early in the week whether or not this thing is going to be able to break this longer term trend line, or if it's going to continue to head lower. But this is one that I am keeping an eye on. This, if it breaks down below, well, let me. Hold on a second here. You know, 1160, 1150 area is kind of a big area of potential price support for IGT. If it breaks below that, that would be problematic, right? I mean, I guess the next area of potential support could be somewhere in the 8 and change range. But it's been in a downtrend for a while. Let's see what these earnings provide. See if we can break, maybe start a new trend higher. But interesting watch for me, IGT. And it's more of a long-term hold, swing type consideration play. ADSK is another one that I think is definitely worth keeping an eye on. This thing has been an absolute beast, and it is trading near all-time highs, right? I mean, look at the run that this thing has been on. Application software sector, I'm really interested in it mainly as as a gauge on the sector of the software application sector. So we'll see how it plays out, but this thing is flirting with all-time highs. I think it's important to keep an eye on it. If this breaks down, you could see some sympathy plays go with it. So worth keeping an eye on. ADSK, SPLK, SPLK is another one that is actually a potential flat top breakout near all-time highs. A pretty good looking setup there on the daily. Takes out those all-time highs. Could be an interesting play. Stochastics actually curling up. MACD, Histo actually looking like it's about to go positive. So this could be another software application play to keep an eye on for that space. And then the last one, I think this is the last one. It is AFMD. So they report on where do they report? Wednesday before the open. So, got an interesting looking setup on the daily time frame at an area of potential price support here, right about $3.19. AFMD, let me take a look at the float. Oops. AFMD. Oops. 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 So, I've seen there are some people out there that are positive on this stock. It's got 50 million shares in the float. Um, let's see. Don't know what their cash is. Don't know what their cash flow is. So, I think this could be an interesting one, possibly after their earnings. I certainly wouldn't take it and hold it into earnings, but this is one maybe to keep an eye on just because I like the technical setup. Um, if it breaks below $3, then or 320, then I think maybe you come down to this 280 area, test that as potential price support. And if we can take out 350 with some conviction, could get a nice little pop. Maybe this thing goes back up and tests the 4 to 450 area once again. So I think that's one to keep an eye on, maybe for a day trading opportunity. And that is it. That is my list of earning stocks to watch. I've got a pretty good list, actually quite a few names for the pro members. I'll be getting that out to you shortly. And look, I think it's going to be continue to be a challenging market for the bulls. I think maybe we could chop around a bit, and then if we get some sectors that break down, I think that could be really problematic in the short term, but create some great opportunities in the short term, right? I think that would be a good thing. I think a reset would be just fine with me. So that's it. Good luck trading out there. Do not chase. Have a plan for each and every trade. Know your risk reward and know your time frame. Know your time frame. Is it a day trade? Is it a swing trade? Or is it a long-term investment? Know that before you take it, okay? All right. Have a fantastic rest of your weekend, and I'll see you all next week.